Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
So guys, let's take a look at the gold market again. So gold market right now is extremely difficult for trading. As you can see, very choppy actions appeared, and mostly this is because actually gold market is a hostage of the really hot and deadly mix of some external geopolitical factors and technical factors that stands on market right now. So sometimes they contradict to each other. Sometimes geopolitical and external factors overrule the normal technical factors, and that lead to just rising of the volatility. So it will be really tough challenge to trade gold market right now and nowadays, because you know what's going on in Syria, you know what's going on with the tariffs, economy, trade wars with the China. Also, new information is coming from the United Kingdom on the Skripal event. So that all this stuff probably will make an impact on the gold market. So, in two words speaking, last week was not really very good for the bulls. Although overall bullish setup has not been destroyed totally yet, because market still stands above the just minor resistance. It stands in tight consolidation below the strong resistance on the monthly chart. So it's just continued to building an energy right below the major level. So in the longer time frames on the weekly and monthly, it seems that overall bullish context still exists, but in the daily chart, especially last week, so if we'll take a look at the weekly, you'll see that this, in fact, was the failure breakout of the flag pattern that we have on the weekly chart. Market also hasn't quite reached the major target. Here, as you can see, 1383. This is the major target on the daily chart, and just COP extension of the EBCD pattern. Besides weekly chart, we've got another bearish grabber here. It's already has been formed for 2 weeks ago, and last week we've got another one. And in fact, this spike up was the fourth challenge of the 1370 level. So market already has challenged 3 times this area, and every time it has failed. And as you know, then as more times market is trying to break the level, as weaker market becomes, and it's less chances that this level will be broken. So that brings lots of tricky moment to the gold market right now. At the same time, on this pullback, right now market has formed bullish grabber that suggests the taking out to this top. In fact, market stands above the level that we have discussed last week. This is intraday 618 support. It's a very important support level, and here you can see it still keeps chances on a possible upward continuation, because we do not know what will happen on Monday, because you can see political situation changing day by day, so it's mostly unpredictable what new events in the geopolitical tensions will happen. Mostly gold market shows reaction on this. But currently, with this pullback, it still keeps chance on the possible upward action. So it means that on the coming week, the 1330 level will be the major border between the short-term bullish scenario and possible bearish scenario when the market could continue downward action, at least back to the 13 even lows. It could be really significant downside action, because, as I said, a lot of bearish signs have been formed during last week. On the intraday charts, guys, on the 4-hour time frame chart, also nothing really good stands for our pattern here. You can see target has not been met just for $2 approximately. So here was the 1366, target stand 3068. Reversal was rather sharp, and market has dropped below the neckline. Since we have talked about this hand and shoulders pattern, not as the isolated pattern, just hitting the target and that's all, we have treated this pattern as the one that could trigger the upward continuation right to the next daily target, the 1383, right? So we could suggest that, for example, market hits the target, shows some retracement, gradual retesting the neckline, and continue move higher. That could be matched to our expectation, but this behavior based on reverse hand and shoulders without touching the major level, major targets, shows the sharp reversal right back down below the neckline. This guy looks bearish. Besides, this is accompanied by the, you can see, clear bearish divergence with the May City. So this is really not very good sign for the bulls. That's why on the hourly chart, what we could do within the few sessions in the beginning of the week. First of all, obviously, we need to take a look at the 1330 lows. That's definitely, because this is agreement at the major support. Also, grabber has been formed here, so that will be the last outpost for the market to hold, because the breaking of this level will erase short-term bullish setup and will open a road for the further drop, because market actually could take the shape of this large AB equals CD pattern down back to the 13 even target. So it's interesting to estimate where it will stand. Approximately we suggest even some higher retracement. It will be 1390 approximately, back down to these lows. This will be at least target because it will be AB equals CD, but it also could be XOP. So that's why this level is the one that you should keep an eye on. Second, as you can see, our suggestion on Friday that we said as market already has hit the OP, hardly we will see some butterfly. It's more probable kind of the double bottom could be formed. Indeed, that has happened. So the double bottom has been formed. This special washing rinse of these lows, previous lows, very typical for the double bottom. And market turns up. So the classical target of this pattern equals to the distance between the neckline and the bottoms, counted in direction of the breakout, and it stands very close to 1350, 1353 major resistance. Besides, this level will be very useful for bears, because despite what pattern could be formed, for example, if we will suggest a straight downward continuation, or if market will hold 1330, this could be the big butterfly, right? So it could become, for example, left wing of the butterfly. Retracement down out from here will start to form right wing of the butterfly. Anyway, some reaction out from this level is possible. So bears could keep an eye on this level, watch for a possible reversal here, watch for patterns. Bearish patterns could be formed, for example, on the 15-minute chart, some AB equals CDs targets. So any bearish signs that will confirm that market could turn down to the downside from this point. Because whatever will happen, some reaction here is possible, and that's, from that standpoint, this is attractive level, because you could move your stop to the break-even and just watch what will happen. Obviously, the breakout for the 1330 will open road for the lower targets, because as you can see, we stand with this ABCD. Market hits OP, shows retracement, dropping below OP will mean that market stands with this trend, just continuation, and that just reaction on this strong support, because you can see this agreement, support, and OP. So for a normal bullish market, existence of this major target should be sufficient to reestablish upward action. So that's why here we need to keep an eye on what will happen. So watch for clear patterns that could be formed. So for example, if market will start to form the butterfly, this could be in the second part of the butterfly will start from, for example, I don't know, Gardner's Triple-2 buy could be formed. Market will reach 1353. On the way down will be ABCD retracement that will give you Gardner's Triple-2 buy. That could become the starting of the right wing of the large butterfly pattern, for example, and market could continue move higher with holding the 1330. So that's one of the scenarios that could be formed. It's very difficult to predict all possible ways, all possible patterns that could be formed. But I'm just show you what approximately you could keep an eye on. So how you could monitor the situation of the gold market, if of course you intend to trade it. But it's currently, as I said, it's very, very difficult market for trading. So let's see how gold will behave in the coming week and whether it will hold the impact of the bearish signs that have been formed also in the last week. So what will happen here?